Okay, so we're about to dive into one of the most audacious, maybe craziest bets in corporate history. And what's wild is it doesn't come from some crypto hedge fund or a Wall Street giant. Nope. It comes from a company that used to make, well, enterprise software. Yeah, this is the story of MicroStrategy. And believe me, it is a wild ride. Just look at this number for a second. 713,500. That's how many Bitcoin MicroStrategy now owns. I mean, to put that into perspective for you, that's more than 2.7% of all the Bitcoin that will ever exist. Think about that. A single publicly traded company holds a huge slice of the entire Bitcoin pie. It's staggering.
And here's where the story gets really, really weird. See, MicroStrategy wasn't born in the crypto space, not even close. They were a business analytics company, a pretty traditional, kind of boring tech firm. And their core software business? Well, some analysts have called it half dead. And that little detail is what really sets the stage for the absolutely radical pivot they made.
So that's the big question, right? How on earth did a software company become one of the biggest Bitcoin whales on the planet? It's this incredible story of high-stakes finance, a completely radical strategy, and just a single-minded obsession. All right, let's get into it.
Okay, so what's their goal here? What's the strategy? Well, it's not about turning a profit every quarter, not in the way you'd think. Their entire mission, their whole reason for being, has been completely rewired for one single purpose: to just accumulate as much Bitcoin as humanly possible. And the way they measure success is, well, it's pretty unique.
And just look at how fast this whole thing escalated. It all started back in August 2020 with a pretty big, but maybe understandable $250 million purchase. But then, just a few months later, they took on over $500 million in debt to buy more. Fast forward to 2025, and they've raised over $25 billion for Bitcoin. And get this, when the price dropped in early 2026, did they get scared? No, they doubled down, buying another 41,000 coins. You see, this isn't just a strategy anymore. It's a full-blown obsession.
So how do you even measure success when you're doing something this crazy? Well, they literally invented their own metric. They call it Bitcoin yield. And the goal isn't to make each share worth more in dollars. No, the goal is to cram more and more Bitcoin behind every single share of their stock. To give you an idea, in 2025, a year where the price of Bitcoin actually fell, their Bitcoin yield grew by almost 23%. So in their world, by their own rules, they were winning, even when on paper their portfolio was down in dollar terms. Okay, so the big question is, how do they keep this buying machine fed? How do they fund this? Well, they've built something that the founder, Michael Saylor, calls a crypto reactor. It's this financial engine that's designed to do something wild. It actually uses market volatility as its fuel. The secret sauce here is something called the premium. Basically, investors are willing to pay way more for a share of MicroStrategy's stock than the actual Bitcoin and software it owns are worth. We're talking a premium of over 100%. So why would anyone do that? Well, for a lot of people, it's just a super easy way to bet big on Bitcoin through a regular stock account with leverage baked in. They aren't just buying the company's assets, they're buying into the whole wild strategy. I mean, look at this chart. It's absolutely staggering. It shows you what's actually driving the stock's performance. The Bitcoin they hold, that accounts for about 7%. The actual software business they started with, 0. A whopping 96.5% of the stock's performance is driven by that premium. It's driven purely by the market's belief in this whole machine.
And that brings us to this quote from Saylor himself, where he calls it a crypto reactor that can run for a long, long period of time. It perfectly explains the feedback loop they've created. See, market volatility gets investors excited, which drives up the stock price and that premium we talked about. MicroStrategy then takes that inflated stock value, raises a ton of cash, and uses it to buy, you guessed it, more Bitcoin. That purchase excites the market all over again, which pushes the premium even higher. It's a totally self-reinforcing cycle.
But, and this is a huge but, here's the most important part. This crypto reactor, it can also go into a full-blown meltdown. The exact same machine that creates all this incredible upward momentum, well, it can also run in reverse, and that could create a catastrophic death spiral. Negative $12.4 billion. That's the net loss MicroStrategy reported in just the fourth quarter of 2025. Now, to be fair, most of this was a paper loss because of accounting rules. They had to mark down the value of their Bitcoin when the price dropped. They didn't actually sell anything at a loss, but still, it's a pretty brutal reminder of the insane volatility they've signed up for.
And this right here, this chart really shows you the tightrope they're walking. On one side, you've got their annual revenue from the actual software business, about $500 million. Okay. On the other side, 8.2 times billion in convertible debt. Their original business doesn't even make enough money to cover the interest payments on their debt. The entire thing, the whole structure, only works as long as they can keep raising more money from the market. So really, it all boils down to two completely opposite ways of looking at this. It's a two-sided coin. On the one hand, you have the bull case. This is a genius, self-feeding machine that gives investors a supercharged way to bet on Bitcoin's rise. But the bear case is just as simple. If Bitcoin takes a nosedive for a long time and that ability to raise money dries up, the whole thing could unravel into that death spiral, forcing them to sell off their Bitcoin hoard just to pay the bills. And the warning signs are definitely there. They're not hiding. Let's run through them. Their official credit rating, it's junk grade. They're saddled with massive debt and dividend obligations. They are totally 100% dependent on the whims of the capital markets. And all this is happening while their original software business is, half dead. And they're constantly diluting their existing shareholders to buy more and more Bitcoin.
Okay, so let's zoom out. What's the big takeaway here? What does this all mean when you put it together?
Here's the bottom line. MicroStrategy isn't really a software company anymore. It has fundamentally transformed itself. It's now a financial instrument. It's a publicly traded, highly leveraged bet, a proxy for one single, incredibly bold conviction about the future of Bitcoin.
And so that leaves us with the ultimate question, doesn't it? Is MicroStrategy writing a brand new playbook for how corporations should operate in the digital age, or is this whole thing just a ticking time bomb, a cautionary tale of what happens when you mix leverage and obsession? Right now, the answer to that question seems to depend entirely on what happens next with Bitcoin.